joining me at this hour. So, welcome to a short video titled "Taking Advantage of Volatility in Post-Election Environment." Yes, we have seen the market in the first quarter of 2023 or year to date to be on a high volatile mode, and this tells you that this volatility creates opportunity for designing traders and investors that understand how to buy low and sell high. But trend and patterns come with all this, especially the market during the election and after the election has a great potential to create wealth for designer investor. Yet we have seen that those investors in the market or traders that took advantage of what we call change in market structure, knowing that yes, since post COVID-19 that the foreign investor left the market, we saw that the local investor took charge of the market, and on the strength of positive performance of quoted companies on the exchange that also that have reflected in their payout, this also supported the market, and this institutional investor, and high growth investor and retail investor in the market, took charge of the market by investing, and that supported the market for almost straight 3 years after the COVID-19. And coming to election year, we saw the market not giving up at all, despite no fear of no election uncertainties. Market maintained an uptrend after touching on the high of almost 54 in the month of May last year. It pulled back to almost also get around the 43,000 mark before rebounding in November, and that trend was extended to even as we speak, despite the pullback we saw in this last week, because we saw almost 4 weeks of of red position and just little green on the last trading day of the week. But I will tell you, in all this, there's already a signal that the market is giving for those that are designing. What I mean, those that are designing, those that understand what to do when a market maintains a positive trend, even the week of the election, general election, that in the last, past election, we have seen the history how market perform during election and after election. What we are seeing today at the end of trading on Friday, we saw that the market had a pullback for the week, but despite to kind of gather momentum or stabilize from what we saw, seeing that the result are expected to start in the market after all the data we have seen from the macroeconomic reports showing that yes, the economy is still wobbling. What I mean wobbling, we have seen that the inflation figure for the month of February has been released. We saw the inflation eating up. We have seen the the purchasing manager for the month of February so that there's a kind of a contraction in business activities. Also, this is also the first quarter of the year. We're going to see what the Q1 earnings for at the month of April. And in all, all eyes and work on the coming MPC meeting. Yes, investors seeing the market in this mood, a lot of panic as a result of what I call contagious fear that came from what from the banking failures, or banks failure in a matured economy. And the good thing is that the government and the central banks of this economies or this domain will have put into action for intervening, and that intervention so that those markets also are breathed out. Who to expect our market also to breathe out? Yes, the fear is that because there is contagious fear will come here. But one thing that our investors down here should note that yes, we have seen some high caps results already, who should know their position. But don't forget that before the high caps came, which are the high caps companies were in the market, the major tools of the market has been the banking sector. We have not seen the results, and because we have seen the impact of this rate hike on their earnings for now, yes, we can say that the impact of the interest rate has also affected those banks that were saying that fail before government intervention in those matured economy. But because of our domain, we have seen that these banks have posted good results, and we have seen their balance sheet, and also we have seen their capital adequacy, we have seen their cash ratio, we have seen a lot of ratios or kind of the indicators to show that these banks are healthy. That tells you that there will no need for us to panic for our banks. But the MPC committee comment on Monday and Tuesday will also give a clarity where we are going, because investors need to understand why they should not panic at this point. Why I say so is that yes, we have seen the latest the outcome of last CZB primary market auction that was held on Wednesday, the week under review, we saw that there was a mixed rate. We saw that the 182 and the 364 rate, we saw a little decline, while the 91 rate we saw also kind of itching up again. But in all this, these are below what? Below 10%. And inflation rate has moved from from 21.34 in January to 21 in December to 21.82 in January, and now in February it has inched up towards 21.91. That is, the inflation is also looking up, and you can see the period of almost from May to the last epidemic that was in January. We have seen that there was rate hike all through, or like almost 600 basis points in rate hike, and that I have not seen it doing much of what on inflation, and that means the move that the federal the CBN have taken in terms of naira design, which the federal government approved. But you can see that there are also some, apart from the security which I know that should not be work of the central bank. But in terms of kind of the naira swap or design naira, so that you're able to control inflation, that your policy would make impact. If that reason is that they want to see that going to the future. That means if that is their position, I don't see them hiking rate with another basic 100 point again in the next episode. I'm saying that yes, if we are seeing inflation slowing down, that's why that it is not down, but we are seeing that the rate of change in the month of February was slow, and that was a result of cash crunch, because there was no cash in the system, and for that people were selling their goods even at a lower price so that they can have cash to survive. Yes, but we believe that because money have come back to the bank cover, the one at that side, that also have a way of controlling the flow of funds that also help to manage inflation. And I believe that this also going to shape the economy. Now that also the CBN have allowed the old naira and the new naira to run concurrent in this period. On that note, investors should not panic. Yes, we know that the first quarter earnings for 2023 will be missed, because this cash is going to affect a lot of sectors. But in all, there are also some industries and sectors that are going to benefit from what has happened in that period. For that, investors should not panic at all. But what we look at this point, that yes, the market is at this point, we've seen a little correction so far, but this is at the peak of what any season. We have seen that about just 15 to 14 companies have released their results and they have announced dividend. We have more than 60 to 65 companies that are yet to announce the results that are December at year end, especially those in financial sector, the oil sector. We have seen the agricultural sector. We have seen also the service, also in insurance. The only sector that have released results you can say is the what is the is the industrial goods. Like I say yes, but others we have seen from different sector. But I believe that today now we have seen that the bank Stanbic entities have started have kind of to trigger the audited account from the bank. That means subsequently start seeing more of a bank. That means this would also the fear that I believe that between now and 31st of March, we have to still more bank results, and that also have a way of shaping the market. That's why they pull back. For me, I tell you that it's not panic, because when the market pull back, the opportunity for those income investors and we traders who saw what happened there, you can pull back down to almost 10 naira. I've seen that they rebounded almost 10% at the end of Friday trading. You can see that you need to understand this market so that you won't be panic. But the good thing is that as an investor, this any season, and we're entering also the second quarter of the year. And I'll tell you that in the history of the stock market, the month that is most active month in the market is what? In the month of April, October, November, December. These are the most active months. And also, like I say, a good investor who position in the market starting from the month of October, it will flow the month of April, and all that continue. That is how to invest. But now that election has come and gone, we have seen that during the election period, market was up, was upbeat, and also now there was little correction. Then after this election season that will come and go, what next? All eyes will be on litigation that's ongoing for the presidential election, and also the handover that's coming in May. And you want to look at the history of the market, what happened in the month of May, in the month of April, and that of June. For the period that there was handover in Nigeria, no government, what happened? No change of pattern from one president to another. You want to look at that. But I will tell you that for investors to really take advantage of the market, before go to the data, I'll tell you that how you can leverage on sentiment, in this market is also very important for us as investors. Why I say so is that How you can leverage on the sentiment report of what the masses or the investors are doing in the market is is very very key, especially on the NGS, to give you an idea of what short term bounce back or pullbacks may happen in the market. It's very very key. It's very good to know. And also, how long will the same trend or stages of the market remain? Because we have a market top in different level. Already we are seeing market topping. That's why we are seeing this pullback, because market is correcting. At this phase, how long will this phase go before we finally see a rebound? These are the things we also be looking at, because after this what we call the division phase, how can you better take advantage of what or the decline phase to move to the next level? These are very very key. Another one is that we know that market, they have cycle. How did these cycles work in the stock market? Time frame, looking at the financial standard deviation, look at the momentum, look at the sentiment, and also defensive play in the market. But technical analysis will work in all these. What means all together, you must know how to create what waves and patterns that also will guide you on what or how to interpret patterns that will guide you to take what informed investment decision. These are the things we need to know on technical side, and also how valuation can also easily help you to focus on stock that for what are likely to reset, assets that that are under price, that when any moment from now, because if you look at the market price to earnings ratio, I will tell you our market price ratio as we speak now is around below 12 times. It tells you that most of the stock on the exchange are cheap. If the whole market earnings to price is below 12 times, it tells you that most of the stock, and that is why if you look at individual stock that are having even below 10 times of their earnings, they are cheaper for you to buy. And also, these those that have one, you can see the opportunity in the market now. But because people don't understand, when they see this pullback, they will panicking. No, you know that when market pullback, it creates opportunity for you to position so that when it go up, you make your money. These are the things that you have at the back of our hand. So valuation is very, very important. How do you also pull out your profit in the market? Most of us that are trading don't have to pull out your market, and why still also protecting your capital when investing or trading? How also in the stock market, using what risk management and position management is very very key. That's why I said in the coming master class, all this will be discussed on what to do, because we see that the first month of the second quarter of the year is a very very active month, the month that every investor. Then the mantra of sell in May has failed in Nigeria, because I'll tell you the incident that sell in May that were it's like a borrow concept for market. It is when the those that are trading in another market go on holiday, before they come, because they're going on holiday, they sell off so that because they are not there to monitor the market. Now that we see technology, everywhere, but then there was not technology was not active, or involved in trading. That's why I said sell in May and come in October or mid September. But now that things have changed, that technology have changed, the opportunity in the market. That's why I see in our market here, sell in May has failed for almost straight 5 years. In the month of May, market going up, or because of what position taking ahead of what the second half result, the second quarter or half year result. These are the things that have changed the market. And now we're already in that season. That season is coming with what? With election rally, and at the same time post election position taking, or new incoming government come with reform. These are the things you want to look at this point, so that at the end of the day you will be in the right position to take. For me, the market, there is no cause for alarm for those that are really invested with knowledge and with information. The market pulling back is a great opportunity for us, because we expect that once market pull back and we start seeing reform generally coming from the new incoming government, that will change the face of the market. And when we're able to get it right after the Supreme Court have taken the rule because of the tribunal that we're expecting, and that will also start attracting what new foreign policy, and we expect also the impact of the Naira swap that CPN have done to also start producing. I believe that all these things that will do a really proper reset that will create opportunity for us in the market. Back to the data I want to show you before I say let me look at the other one first. At this point now you can see that the month of April, we want to look at the year of transition or change of pattern. In 1999, we saw the month of May, market lost what? Lost 7.53. Then the next month, which was June, which was that same year, market gained 22. The market have regained what it lost even the month of April and May in the month of June. And it was the month was the new government came in. A month after the first month after the new government came in May 29. You can see Then you now move forward to see other world. We know that in 2003 was the same government, but look at when that was also changed in 2007. That is when Obasanjo hand over to what Yaradua. You can see here that the market also in the month of April was seen that the market was positive 7. That was sustained in the month of what? In the month of this also election period. You can also see the election has come and this post-election period. You can also see that the market was 5% up, and that also was sustained in the what in the second month. And as you can see, oh no, we're not talking of other month, we're talking of that same quarter. You can see that it was in green. And also look at the year. The only way you see that there's a change in little trade is in 2000 and what 2015, where the incumbent was the incumbent hand over to incoming government. And you can see here in 2015, in the month of May, the market was down, and for after the market has gained in the almost from February to April, gain almost 9% in the month of April, but before slowing down to 1.2, and that's taking the market in the positive for the quarter. Even as at June, you can see that there is correction in this on quarter. That's why I said the month of April and then October and then November, December, these are the active months where, but the month that most investors will call a sell month in the market, people are not taking position. In the month of February, so the month of August and what as September. These are the period that people don't know. Market look down most time, sell period before you start your position taking for the month of October, seeing results and all stuff for the year. Then, but we are going to look at the whole thing to see this pattern, this chart is telling you what to do in this period, and this for what for 2015. And don't forget that 2019 was continuation of the incumbent government. That we're looking at where pattern was changing, and also we expect that 2023 pattern will changing by God's grace. Any moment from now, you can see that we're already in March. I can see that first quarter, first month, January and February saw green position. See also this April, and we're going to see some little change here. When it comes, I believe that this also going to impact the market positively. On that note, this is the month of May we're looking at to see the month of April and May. I will see if this trend is also sustained here. I believe that that is what we are looking at to see. For me, investors should not panic, or rather, hold their position and invest well. There's no cause for alarm. The coming master class will open your eyes on how to do and the stock to buy for this period you are entering, because I tell you, the Q2 is one of the active quarter in the market, and also before we look at the last quarter of the year. But in position from this period after seeing the first quarter result of the company, it gives you an insight how to position for the rest of the year. That's why attending the Q2 master class is for you to position for the rest of the year, because market will go beyond Q2, then continue, and you must position ahead to make sure that you take advantage of what we're going to see as the incoming government is coming with the reforms and expect the world to put Nigeria economy in the right direction. For that, you must position ahead of that, because it's very, very important. These are the key things that we expect in the market, because I tell you that the market will remain where it is, because every market have a peculiarity that guide their movement or their corrections, and also their rally. And if you understand it very well, you don't need to panic at all, especially in a market where we see that our market is being dominated by local investors. Once we get the election right now we have done, and we start successful handover, and that then also will start building a kind of confidence among the foreign investor and local investor for continuity for the next 4 years. That means we don't need to panic at all, but rather take advantage of advantage of the low prices if the correction go behind it. But I believe that for us that are preparing for the master class, the market correcting is a plus for us, and we're already happy reducing the data that the pullback will create that opportunity that people to make money in Q2. Well, after pulling back, market rebound will have more strength to go up further, and for that, we need to also take advantage of. That means if you are not registered for the event, take time now and register. And I believe that at the end of the day, you'll be in for great return, and your confidence in investing also will improve tremendously, because after hearing all those experts in the market and taking you through what is going to happen in some sectors and industries, and also the pattern that we're going to, like me, I'm going to tell you the pattern, how to get the benefit for this pattern. It's very, very important that you be in that session, so that you can take advantage of all this I want to discuss in that class, because I'll tell you that the volatility we're seeing today, is for me is a good opportunity for us to take advantage of that volatility and create wealth for ourselves. And you need to be in the class, and that is why now I will still go back to the chart so that we can see what is happening. This is the chart on a weekly basis. You can see that the chart maintains an uptrend, but from here you can see that down market has given you a sign. But the good thing is that market has not slide down below the T line. Yes, but I will tell you that the opportunity here is still very because any moment from now the market can rebound, especially as we expect to see more results. Already we have seen the full year result coming from Stanbic IBTC with a final 2 naira in addition to their 1 naira 50 kobo into the night about for a whole year 10 naira 50 kobo. We have seen that of custodian investment. Custodian is declaring a final of 55 kobo in addition to to 10 kobo they paid as in that is was 65 kobo and the stock is selling below now. You can see the yield, but with that 55 kobo alone, you can get on almost 8 to 9% dividend yield on a short period. And also if they are come together, because we have seen that those sectors they also, because they are a conglomerate company, because they are also into insurance and so what insurance business, the kind of premium they are enjoying, this new year. I believe that or they're going to enjoy the latest today. That's also going to shape what's going to happen in that. For me, let's keep our eyes on earnings that are going to support the market. But the outcome of MPC meeting I've said was going to be a real kind of decider where the market, a really kind of factor that will shape the market. But don't forget that I've said earlier that we don't expect to see another 100 basis point hike in interest rates from the community in this coming Monday and Tuesday. But a good one is that if there will be any hike, I don't expect to be more than 50 basis points or even less than 25. Ideally, if you expect to see a pullback kind of unchanged in terms of rate hike, don't leave it flat to watch. But let's see what they do, because what happened in ECB today, and I tell you that even with their inflation slowing down, they still want their head to increase their rate 50 basis points. Even when the banks there, some of them are shaking and they are done intervention. But I believe that that is what we're going to spend. For me, there's no cause for alarm in the market. The market is still very, very, for me, strong. Look at the momentum behind it. Yes, we saw a slowdown in momentum in the market, but that should not give us a sign to start panicking in the market. No, rather take advantage of this pullback. There are those that have taken profit before now. Yes, there are some positions we are still waiting to see if we can exit this month again. Once we start exiting, to give you cash to position for the Q2. And I tell you, no matter what happens, there might be some slowdown because of new government coming in, settling down to appoint ministers, settling down to what for the National Assembly to take the kind of select their leaders. But that will take time. Before the end of July, we expect the government to start settling. But the factor that will this market between before that period is what I'm telling you, that these numbers that we are seeing, whether they expect to see a mixed number, as of set us, they put back the price will make it attractive for us to position ahead of what expected reform in the market. For me, there's no cause for alarm. On that note, I've said, no, for those that have not registered, go ahead and register for the coming masterclass. I'm going to share more on what to do in that class. Really, Kofi is already set for what, for pattern for what to see, the advantage of take advantage of the post-election rally. I should also be looking at the pattern also. Why also be looking at how to manage risk, in using the technology to manage risk. That's what we should be looking at. Why the Mr. Abiodun will be looking at the sectorial, food sector, and the benefit from what has happened and what we expect. Industry. These are things we then we get details and also stop. They will give you some stuff to pick on their own. Then we'll not finally give you better 5 good stock that you're going to take position. For that, I will look forward to see you in that class. And I believe that at the end of the day, you have cause to thank God that you are in that class, because there is a lot of things to discuss that will change your portfolio at the end of the day. On that note, I say thank you and look forward to see you in the class on the 1st of April. Bye.